Well, hello everyone. Don Garman and Lauren Moon here from Mirador Capital Partners. Once again, here we are in September. And we were hopeful when we met last time that things were going to settle out for the summer, and maybe the fall has other plans. So we will. Market just closed here on Tuesday. We just got out of investment committee not too long ago, so we thought we'd update you on some thoughts and some things that we're seeing, and share news, whether it's good, bad, or indifferent. We always just want to be in front of you and sharing at least the latest thinking about some of the very challenging, some of this challenging backdrop that we confront. But before we do that, I would say this could and will likely be the last time we see Lauren before she is about to have her fourth child. So she'll be taking care of that sweet child for a little while, but rest assured, if you need anything, or you want to reach out and ping me or Audrey or anyone on the ops team, or just call the main line, somebody will be happy to pick it up, and we will serve you as best we can while we give Lauren a little time to relax before we bring her back, and then she gets to enjoy the relaxing market that we have awaiting her when she gets back here. So anyway, Lauren, congratulations, and hopefully everything goes super smooth. I'm sure it will. On to other topics. We just got out of IC. I mean, I don't want to, lead the witness, but share whatever thoughts that occurred to you after we met, and kind of what are you thinking going into the fall, and then I will share with you some things that I didn't even bring up during IC for our loyal followers.
All right, where to start? So I think since the last video came out, we had this major kind of bummer of an announcement from Jerome Powell after their meeting that turned the tides of the markets pretty sharply in terms of what we were expecting. We were hoping interest rates may not have to go up as much. He's leading us to believe that the Fed will still be increasing rates. There's still concern about inflation. All of these kind of macro concerns that looked like maybe they were improving have kind of come back full circle in the last month or so. Yeah. So that was guiding a lot of our IC conversation. Of course, this ties into our positioning and what we're doing with the strategies. And I think a key point you made, Don, is that the companies we're investing in are good businesses. They're profitable. They're compounding cash. There may be good, M&A opportunities for them during this time, and really hammering on the importance of waiting it out. And there are market cycles, and there are up years and down years, and it doesn't mean that we panic or scramble to do, to make significant moves. So I think that's kind of our overarching theme. We like our positioning. We think we're in a good defensive position, but we're also able to capture upside when things turn. So that was my takeaway. Yeah. Don, how about you?
No, I think that's well said. And I think the way to think about what we're attempting to do in this treacherous period, and you guys have heard me refer to the volume dial, right? How we use being hedged against S&P 500 and NASDAQ 100 declines is through turning down the volume or the amplitude of how much long exposure we have. The playbook for us going forward will be, the lower the general stock market goes, we will reduce the amount of defense we're playing, and in essence, be more comfortable owning things and having a higher dial exposure if things are going to continue to decline into the fall. We have no idea if they're going to. What we know is that the multiple's still relatively high for the level of interest rates. We all can agree that there has been some general inertia or lack of inertia in terms of things are slowing, housing slowing, even gas prices are coming back down. So even if you watch any of the news, there is this, everybody's almost talking each other and themselves into some period of slow growth. And if you have high inflation, that is the very definition of stagflation. It's not a good condition. Nobody wanted to be here. this is the outcome of, this is one of the unintended consequences of printing $6 trillion that we don't have in 2 years and flushing it through the economic system. So now we're dealing with the aftermath and the bullwhip and all of the different things that are just, super volatile. And I hope when we give way into 2023, what we will be in, thought this was a very interesting day, post Labor Day, my experience, roads clogged, people are going somewhere. Everyone says they're not going to an office, they're going somewhere. So maybe because it's 112, they're all going to the beach on a Tuesday. My hunch is a lot of them are going back to the office. So I think as we get into Q4 in 2023, perhaps there are better days ahead. The point is, there are better days ahead. By definition, there always are. And so what we need to make sure is we are in the companies that will inherit whatever's next, and that will be the ones that can, maneuver and adapt and reprice and lay off or automate or whatever all businesses do to continue to push through these times. But the CEOs I talk to, and I talk to several, are looking at this as an opportunity to come out of this stronger. And I think that's really the lesson and kind of why we have to sit, as you've heard me say it a million times, I look at rolling 3-year periods, because the market on average over long periods goes up 2 and down 1, up 2 and down 1. Not always perfect, but this I think is just going to end up looking like the down 1. And we just got to hold the chassis together as best we can and move forward with as much as we can, so that when we ultimately see higher heights, we're all there to see it together. So that would be the hope.
And I think the other thing I'd point out, or that we talked about, is that especially in markets like this, not that we've been in this exact market before, but even us as advisors are getting pitched a lot of different products of sorts, of like, here's the sweet answer to all of your concerns about the market. And it's tempting to, think that maybe there's some secret angle that's going to save the day here. But in reality, the best action is to stay the course, usually.
There is no easy way. There is no secret asset that's just going to go up and pay great income while you wait. There is no magic bullet that gets us all through this without any risk. Doesn't work that way.
That's not to say we're not looking for, sectors we think will perform well in this environment. We're for sure doing that in the best companies within those sectors, but
some other structure somewhere else, is very seldom the answer. And if I've said it not glibly, if I just had 4 clients the money back that they've lost on those type of things over the years, they would be much better off. So anyway, we are always on the lookout for the next great thing, but a lot of times the best thing to do is just hunker down and get through it, which is what we're doing right now. So anything else, Lauren?
I think that's it.
We'll leave it there for now. If things get really weird, we'll come on in between the months here and try to catch everybody up. If something exogenous or really strange is happening, other than the normal really strange stuff that we all endure on a daily basis now. But mostly, Lauren, thank you for everything. We wish you a healthy and speedy recovery and a healthy baby, and your lovely family. I'm sure will be very helpful along the way, and we'll be excited to welcome you back whenever that day comes.
Great. Thank you.
Thanks, everyone.
Everyone.
Talk to you soon.